Funds, co-CIO. He's smart enough to have $17 billion in assets under management, much of them in small caps. Who knew they quietly were jumping ahead?
It's been a fascinating year within the small cap space. We had a bear market in small caps that bottomed in February 11th, and the market has rallied over 30% or close to 30% from the bottom. I think a couple things have happened since the low. One is there have been some unfounded economic fears that haven't taken place, right? So the correction in the market was based on an economic growth scare that hasn't happened.
Are you saying the economy is actually good enough to sustain small and mid-cap growth companies?
I am. I'm saying this anemic economic environment where we hear day after day from companies that the economy is bumping along, and from you, the economy is bumping along, and they're doing okay. I mean, it would be wonderful to have some top-line growth. Top-line growth would be fantastic, but the earnings and the profit recession that people have worried about so much has yet to really find a home yet within the small cap space.
You know, people are going to say, well, then what is this guy like if he's doing so well? There are two names. We can put them up on the screen. Moelis, which is, of course, the independent investment bank, and Dorman Products, automotive products. Interesting. Those are both about $2 billion market cap, considered small. Investment banking, I thought that was being squeezed down by too much regulation.
What's interesting about both of these stocks is they're very representative of what we do. Moelis is a great company that, exactly to your point, is an underserved market.
Yeah, can we show them?
An investment banking, independent investment bank that in an environment with very little in terms of IPOs, M&A continues to be quite strong, especially in this anemic economic environment as companies are looking for top-line growth and whatever they can do to grow their businesses. But here's a business that was started by Ken Moelis several years ago. It has a 4.5%, almost 4.8% dividend yield today, and we think has great opportunity going forward. On the flip side, you have a company like Dorman Products, which is what we would consider to be a very high-quality company. It generates probably mid 20s in terms of return on invested capital, zero debt, and it's just a fantastic auto supplier.
Well, Frank, you get to be here when we see what appear to be 3 all-time record closes on this Thursday. Frank Gannon of Royce Funds.